Kia ora, and welcome to the otality property market update for Pupuri, June 2025. Brought to you by Loan Market. Property values across Aotearoa appeared to hit a small speed bump in May, dipping 0.1% over the month to a median value of just over $818,000. While values are still up 0.4% since the start of the year, the already mild upturn is now looking even more anemic. This trend is clear across the main centres, where, when visualised on a chart, value movements have looked effectively flat for the past 6 to 9 months in many cases. Kirikiriroa Hamilton stands out as the only one of the 6 main centres not to lose momentum recently, with values up 1.0% over the last 3 months. The others range from a 0.2% fall in Te Whanganui-a-Tara Wellington and Otautahi Christchurch to a 0.8% decline in Ōtepoti Dunedin. That said, monthly and regional volatility isn't unexpected. Market headwinds have been well forecasted. Listed supply remains relatively high, the economy is struggling to shift out of first gear, the labour market is still weak, and falling interest rates take time to filter through to existing mortgage holders' pockets. The government's highly anticipated budget, presented in May, was predictably restrained, reinforcing the likelihood that monetary policy will need to continue doing the heavy lifting to pull the country out of recession. On that note, the official cash rate decision and monetary policy statement published at the end of May were largely in line with expectations. The OCR forecast was revised down, prompting further falls in mortgage interest rates. However, the tone of the statement and the fact that one member voted to hold suggests the next 1 or 2 decisions are less clear-cut. The Reserve Bank is likely to wait for more data on GDP and inflation before making its next move down. With 40.4% of all mortgages due to refix in the next 6 months, and another 12.8% currently floating, there's hope that as these loans roll onto lower rates and smaller repayments, households will spend their newly freed up disposable income within the New Zealand economy. At present, we're seeing a 2-speed economy. The regions appear to be faring better, buoyed by strength in the agricultural sector and expectations of an export-led recovery, despite ongoing uncertainty from the evolving US tariff situation and general global caution. This may help areas like Ngā Motu, New Plymouth, and Waihopai and Invercargill continue to outperform. In both cities, values are already back to their post-COVID peak levels. Meanwhile, the unique Tahuna Queenstown Lakes District is just 2.7% below its peak, and relatively affordable Otautahi Christchurch is 6% back. All other main urban areas are still 10% or more below their peak values. First home buyers remain active, supported by increased borrowing capacity and a willingness to take advantage of low deposit loans. However, as highlighted in our latest otality Westpac report, they're having to wait longer to get on the ladder. The average age of a first home buyer is now 36, up 2 years from 2019. We're also seeing more debt-to-income lending above the Reserve Bank's high threshold, indicating that buyers are willing to stretch a little to secure their desired property, but not at any cost, as the flat market shows. It's a fascinating market, with each data release offering new insights. To stay informed, follow us on the otality NZ social channels, and subscribe to the New Zealand Property Market Podcast on all good podcast platforms. While the brand has changed from CoreLogic to otality, we continue to deliver New Zealand's leading housing market insights and metrics. For now, you can still find these on the news and research pages of the CoreLogic NZ website. Mā te wā.